Let's take a look at some information and charts on Ethereum Classic for Brave New Coin. So Ethereum Classic was birthed from a political debate really around the DAO failure hard fork, which was when the ETH DAO was hacked and a substantial amount of ETH was unrecoverable. The community at large decided at the time to fork the chain, effectively creating a rollback, and a small minority of individuals disagreed with this and forked off and created ETH Classic. In general, ETC has forever been an understudy of Ethereum. Unlike Ethereum, ETH Classic will eventually move to, unlike ETH Classic, Ethereum will move to proof of stake. ETH Classic is unlikely to ever move to proof of stake, at least that's what they've said. So where will the miners go once Ethereum is proof of stake? They will go to ETH Classic. They really don't have a choice. I'm just excited to see GPUs come down in price again, because GPUs are still extremely expensive beyond MSRP because of spec mining on Ethereum and other coins that have high fees. So along with the DAO drama on the Wikipedia page, you can see that ETH Classic has had a series of 51% double spend attacks, and they've mitigated that, or at least attempted to mitigate that, with changes in the functionality of the chain itself. They have not changed the algorithm. They've lengthened the epoch. I'm not going to go into that. You can look into it further if you want. And really, ETC is just perpetually steps behind ETH, like LTCs perpetually steps behind BTC. That's just the nature of it. They will implement any changes on ETH in a future fork, and they have a future fork coming up. Again, none of this to me matters at all. The chain itself is meaningless until ETH goes proof of stake. At that point in time, then there's an additional fork in the road for people, specifically miners, who have no other choice but to try to recoup ROI or continue mining on Ethereum Classic. So you can say they're doing this and that and have all this stuff going for them. Irrelevant to me. Doesn't matter, right? It's not going to move the needle. It's just not. And the ETC community isn't going to want to hear that, but that's just the way things are. If we look at the hash rate and difficulty, it has waxed and waned with price a lot. It has waxed and waned with China news. So it looks like there's some mining related to ETC in China. And this will go up and down with price too, so it's hard to tease apart which is which. But when they got into trouble with 51% attacks, they were having declines in hash rate. And you see this with any chain, including BSV, which currently, or a couple days ago, it was under a chain reorg situation, massive double spends, that sort of thing. This is the reason why you look at hash rate continuously, just to make sure, as a sanity check, how secure is the network. We can quantify that. We can look at the cost of a 51% attack for 1 hour a day, however you want to quantify that. We can look at nice hash, which is, I think, cloud mining stuff. But we can look at this list and just see which is vulnerable, which is not. ETC is not on this list. I do not know why it is not on this list. I assume at one point in time it was on this list, and possibly removed because of changes to the chain. I do not know, but this was the first place I thought I'd look to see if ETC was on here, and I did not see it. Maybe it's just too low of a market cap to be on here. I don't know, but it's not on here. As far as the ASICs are concerned for ETH, Bitmain is still releasing an ETH-hash or ETH-hash ASIC, as well as in a silicon. These will have a very short time frame to recoup ROI. And again, where are miners going to go? They're going to go to ETC. You're going to see ETC hash rate probably match the previous ETH hash rate once ETH goes proof of stake, right? There's going to be a flippening here between ETC and ETH hash rate. ETH hash rate will go to 0 eventually. ETC hash rate will equal the previous ETH hash rate, most likely, right? When you have nowhere else to go, what are you going to do? It makes sense, even if you're an ETH fanboy, to continue mining on ETC, if it's even around. I mean, I'm making a lot of assumptions here that ETC survives that transition for whatever reason, right? Seeing stuff like this is a website I used previously for trusted node data, is down. I don't know why. It is what it is. I can't look at that data. We can look at stuff on chain. Again, if we compare ETC to ETH, if you're unsure, one is winning the post-DAO fork war. Here's active addresses between the two. over 550,000 on ETH compared to under 35,000 on ETC. Gas used per transaction, it's pretty clear. It's 99%. ETH versus ETC. We look at issuance, and issuance on ETH versus ETC is at least a percentage point annually plus. To see the data drop off here on Coinmetrics suggests to me that they're having some issues with nodes, or their data providers having some issues with nodes, which further gives me concern when I see stuff like this where, oh, the nodes can't be called, or the API, whatever. I don't know what's going on behind the scenes, but you don't want to see that. But anyway, issuance on ETC is greater than ETH. ETH has EIP 1559 coming. I don't know if ETC will be implementing that. I assume if it's successful, they will be, because why not? Total fees, ETH per day, 6 million, ETC, $320 total. So, it's pretty clear here where the miners are going to go, where the incentives are currently. It's undisputable, right? Even if we looked in the peak fees of ETH versus ETC, 120 million versus 1350, right? This isn't a video to dunk on ETC versus ETH. I'm just saying this is why it does not matter. This is why the chain does not matter in the grand scheme of things at this point in time. So keep that in mind. Here are some ETC specific on-chain stats. Transaction counts continue to rise and kind of staying high rather, even despite the price downturn, which is good to see if you're bullish. Transaction counts way down since all-time highs, or near all-time highs in price over the past few months. So there were probably a lot of big transfers, probably a lot of cold storage wallets got cracked, people selling, that sort of thing. NVT continues to decline actually, which is bullish for anything in a vacuum. And active addresses, again, are just really not there, right? 12,000, 13,000 on any given day, slightly rising over the past few months. The previous activity was likely some sort of stress test, or transmitting weather data. I don't know, something super pointless that is no longer on the chain, right? You typically see this on BCH, BSV, where these forks try to say we're supreme because we have higher output data, throughput, whatever, right? Just all nonsense compared to what's going on the main chain, that is ETH. ETC also has a Grayscale Trust, thanks to Barry, who was an early champion of ETC, and it is the third largest trust. It has its own ticker, ETCG, in the Grayscale ecosystem. At one point, it was, I think, around 42% discounted. Grayscale came out and said, we're going to buy some back, right? Grayscale collects fees on this regardless of if it's up or down. It's agnostic to direction. They collect fees. And eventually people are going to turn sour on that. My guess is this is a lot of Barry's own money. Perhaps. Just speculation. There's really no reason that this has the AUM it does, in my mind. You can say the same with most of the stuff on here, but specifically ETC. All right, that's enough of fundamental dunking on it. The other thing to mention is if DeFi stuff shifts to ETC, I don't foresee that happening, but if it does, that's another win for ETC versus ETH in the proof of stake ecosystem. And again, the amount of time it's going to take ETH to switch to proof of stake may surpass the amount of time ETC is even in existence in the future. So keep that in mind. Switching to technicals, this is the MA multiplier. Yesterday I was talking about DAO theory and mean reversion and corrections, and the MA multiplier is a way to quantify the possibilities and probabilities of mean reversions, both back to the mean and from above or below, right? So if we're too overbought, we're in the red. If we're too oversold, we're in the green. Historically, it's caught this reasonably well, at least in the buy zones. Obviously, it's only had one example really of hitting that sell zone. But if it hits that sell zone, you can't turn a blind eye and say, man, this is going to go higher, right? It hit 100 on a wick or something probably. That was way above the 5x multiple. So when you see very quick movements where the MA can't even catch up to price, much of that is likely fueled by speculation and mania and will not hold water over time. Think of it as a mean reversion. Think of it as a correction. Think of it as a bunch of weak hands piling in and out of whatever's going up or down, right? But it's very clear what this was telling you at the time. Currently, the rebuy is 19 or lower on that indicator. We're still above the 200. We're still kind of meandering in and around the 50. This is the 50 to 200, the VPVR, volume, RSI, monthly pivots. Poloniex is horrible to look at for volume because they're basically a non-factor these days, but they do have previous chart history, which is why I like to pay attention to them in these videos. But support, much like the MA multiplier, is 19 or lower based on VPVR, based on monthly pivots. And, we're at 45, so keep that in mind. That's an over 50% decline still. I would watch for bullish divergence on any lower lows. I'd watch for the formation of a descending triangle. All of these things, just don't look good for ETC. If we look on the daily cloud, the party's clearly over. Alternatively, using my hopium glasses, if I was long this, I would watch for an inverted head and shoulders with a neckline around 62 and a bullish breakout of the cloud around 62. I think that is highly, highly unlikely in the near term, and this would probably form over the next month or two with a Q4 resolution. So remotely like deserted island, remotely possibility. This probably eventually forms a descending triangle, goes for lower lows, much like BTC in 2018. You can also watch the 12-hour cloud for any sort of bullish reversal potential. And it got denied at the cloud, had a bullish TK cross, and now it looks like it's going to have another bearish TK cross with price below the cloud. So it's never a good sign. This is on Binance, so it's going to look a little different than Polo. So keep in mind, depending where you watch this or trade it, things are going to look a bit wonky. So if this is bullish, you expect a push from 50 to 75-ish. Otherwise, this is going to take a long time to get back above the 12-hour cloud. ETH-BTC is ranging pretty heavily. Kind of shocked me that it's just holding this range. You could argue bull flag, bull pennant in this volume area on Polo. Ultimately, though, I'm not too bullish on the prospect of ETC outperforming BTC in the long term, and it's probably just done for now, sideways ranging in the 90,000 to 100,000 sat area. You can see this parabolic RSI has cooled off significantly and a bunch of volume resistance at 002. And then on ETC ETH, there's a significant volume resistance on the upside. Although it does look like an ascending triangle, right? This does look decently bullish, surprisingly, against Ethereum. I don't think, again, it's not going to matter until proof of stake. It just doesn't. Look at all the metrics. Look at all the on-chain metrics. Look at DeFi. The proof is in the pudding, and the pudding is all on Ethereum. So there's really nothing else to say about that. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool, where you can send ETH to USDC or just watch what I'm doing. You can see AUM, allocation, trades, performance, deposits, withdrawals. You can see me going in and out of Yearn, Comp, Paraswap, Aave, ZRX on occasion. The DeFi portfolio is more traded based on fundamentals and some yield plays versus the ETH-BTC stuff, which is more TA and less FA based, but I still use fundamental analysis for trading decisions here. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.